Good morning, and welcome to episode 162 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, February 21st, 2024. The Chinese central bank aggressively cut their key interest rate from 4.2% down to 3.95% in an effort to spur growth in their struggling economy. Here in the U.S., we've seen of late a tick up in both the consumer price index and the producer price index, which suggests that we may see further increases in the consumer price index as the producer prices feed into that number. As a result, more and more people are out there thinking that we may see actually a rate increase in interest rates as opposed to a rate cut first. Our good friend Chuck Butler of the Daily Pfennig came out saying as much. I know you've heard me say as much the past couple episodes of Getting Rich. I think there's a real possibility here, if inflation doesn't start to abate, that we're going to see interest rate increases and certainly not interest rate cuts like the market is almost willing to happen on a daily basis. Any slight bit of good news, everybody's expecting the Fed to cut rates at the next meeting, and I just don't see that happening, and there's others that are starting to believe that as well. Of course, part of the problem is we continue to see issues in our economy. A headline today from Financial Times, I'll read a little bit to you here. Bad property debt outstrips reserves at big U.S. banks as late payments rise. Bad commercial real estate loans have overtaken loss reserves at the biggest U.S. banks, with a sharp increase in late payments linked to offices, shopping centers, and other properties. Where have we seen this before? Average reserves at JP Morgan Chase, Bank of America, Wells Fargo, Citigroup, Goldman Sachs, and Morgan Stanley have fallen from $1.60 to 90 cents for every dollar of commercial real estate debt on which a borrower is at least 30 days late, according to filings to the Federal Deposit Insurance Corporation, FDIC. The sharp deterioration took place in the past year after delinquent commercial property debt for the six big banks nearly tripled to $9.3 billion. If everybody thinks that the banking crisis is over, there's no potential for further demise, I think you are missing the boat. Let's take a look at the precious metals prices over the past week. Gold is up 1.8% to $2,027.60 an ounce. That's up from $1,992.70 last week. Remember last week we said there was an opportunity here with gold dipping below $2,000 to go ahead and pick some up. That was very short-lived, as it turns out. Hopefully you took advantage of that. You listened to us here at Getting Rich. Silver up 4.8% in the past week to $23.14. It was $22.09 and actually dipped below $22 an ounce last week. Platinum is up 1.6% to $905 an ounce from $891 an ounce last week. And palladium, your big winner, up 11.1%. Of course, it tends to be more volatile. It's at $994 an ounce. It was $895 an ounce last week. With silver outpacing gold to the upside, you can imagine it takes less ounces of silver to buy an ounce of gold this week. That gold-silver ratio number is $88. It was $90.54 last week, and the dollar slightly under pressure, giving back a little bit of its strength. It was $104.90 last week. Today it sits at $104.15. Listen, folks, there are still problems on the horizon. The problems have a solution, and it's owning gold. There's no two ways about it. If you think everything's okay, fine. Stay with what you're doing. Stay the course. Leave gold out of your portfolio. If you see the writing on the wall, as I do, I've got only one question for you, and that's got gold? Maybe another question, got silver? As always, we like you to go ahead and Follow us on YouTube, like us, send us your comments and questions. Follow us on social media. Follow us on our twice weekly Always Something Interesting alerts and our once monthly information line newsletter. I'm getting ready to head out to Ojai, California this weekend, where next week I'll be joining the Oxford Club for their Investment U. We'll go ahead and have about 4 different presentations out there, to include a pre-conference seminar with Jeff Anandapa and Rare Tangible Assets, and then we'll have a luncheon presentation. We'll have a general session and a workshop. If you guys are joining us, I look forward to seeing you there. If you're not, still not too late to go ahead and sign up for a live stream. Go ahead and follow the link below this email. But in the end, I hope you never ever forget that getting rich starts with keeping what's yours.